Hey traders, Jeff coming to you here for December 30th. I'm going to show you a trade on AVGO. Now we did this a couple of days ago in the day trade side. We made a little over $1,090. Today, or on the 23rd, we did it at $790 and we ran a weekly credit spread against it. Now, currently I'm in the process of showing you day trades, how to trade stocks, look for good gap patterns, supply and demand, support and resistance, gaps into where the bears control the bar running through supply. And then I'm going to switch gears with you shortly and start to show you some income, how we trade for income using some of these plays called weekly plays. And there's a lot of different strategies that we take. Diagonals, spreads, we roll and short leg out to improve our position, things like that. So right now I'm just kind of showing you some day trades, but I do switch gears on from time to time. So let's take a second and let's review the AVGO play we did on December 23rd. All right, so again, AVGO the 23rd here. We ran it on the 22nd, ran it on the 23rd. We made about $2,000 on this trade, maybe all in about 45 minutes, an hour maybe. Again, this, as I mentioned before, this is the type of trading we do when the market's ripe off of gaps. It's a strategy involved with that, trading gaps, but very specific, timing, entries, pullbacks, and such, and things like that. This is only about 20% of what we do or less. We get on to trading after the first hour, but a lot of people are waiting not to get knee-jerked in. We're waiting for day trades, and then we move on to our options trading. So you want the best of both worlds. We do it here. I've been trading for about 25 years, and nothing changes when it comes to gaps. You're still looking for a good amount of volume, a gap that's gapping over into an area of void, and then watching that pull back and how it responds to the moving averages, the VWAP, and Fibonacci channels for pullbacks, and obviously just over the spreads and things like that. So nothing really changes, but to me, it's the easiest money out there. I mean, when you're trading breakouts this year, it was very difficult until we switched gears and got these pullbacks, but it's easier to take those pullbacks at those desired areas. If you're wrong, you're wrong, but we find those areas that actually are right to go higher. Take a look. Again, trading in the financial markets, as I always mention, involves significant risks. Trading options or stocks can be risky. What we're showing you today, even though we have some great profits here, doesn't mean that you will, and the past does not equal the future. That goes without saying, but I like to say it every time just to keep us mentally balanced on that. Here's the key areas of the AVGO gap. Number one, the two key areas we're watching in here was gap detection with high volume. We saw that volume coming in, lots of volume in here. It was where it was happening at a 38% retracement from the bottom here at the pullback. Now, who controlled this bar in here? Infinitely, the bears did, right? It was a buy setup that actually ran into a buy setup right here, and the bears took control of the last part of the day and closed here. However, when we gap up in here, not only on the daily chart, but on the 65-minute chart, as you'll see, where we were gapping from, how it got there, where it was gapping to, was everything about this gap. So we'll review that with you. Finally, the technical setup confirmation, the gap aligned with key support areas from previous sessions. We're looking for the turn in AVGO. A lot of news behind the stock, good gaps, good volume in here, trading clean. We just had to wait for our entry in here. So take a look at where we're from. Now, this is a 65-minute chart that I talked about. Again, this is the start of the day, and it rolled back here. But look where a bulk of the shares, if you look at the volume, I don't have it on here, was huge, 3 or 4 times that last hourly bar. When you're gapping over that bar by 70, 80%, you're covering a lot, you're trapping a lot of shorts that were recently in that trade. So we simply basically got in that trade at 80% gap up here, trapping some shorts. Now, I prefer this to be no more than 10% of a bottoming tail in here. This was about maybe 18 to 20, but it came with a wide range bar, so I was willing to take that shot. The second thing on this is that we were actually gapping up over into the 8-period moving average, and we've held that 8 ever since that 4. So, short covering 80% gap into the excessive volume bar. Could have stood for a little less of a tail, but we had a wide range bar, gapping into the bar, made this a very juicy gap, holding the 65-minute 80 EMA. How did we do it? We entered near the 50 bib here. This is what I was telling our traders in here. So you know what? We may miss the trade if it keeps going here. If it goes down here and then back up here, but I'm willing to miss that trade, specifically when we have this bottom to top. What's happened is that it's balancing itself out. It's taking supply off the market. It's funneling it off. And what we don't want to be in there, we don't want to be in the right direction, but the wrong time, because you get in when supply is coming off, it's not ready. If you give it too wide of a stop here, you're not going to make anything. A third of an R, a quarter of an R, your risk reward is very challenged like that. So what we have to do is either let this trade go, as I mentioned to the room members, is let this break out and pull back. You can see the pullback at 50% was right here. We're going to take the 50% at the flat 50 MA on the 5-minute chart, which is where we got in here. This thing only went down like 19 cents into that tail. Our stop was well down in here. Moved up, came back, sat here, positioned for about 20, 25 minutes, and then it took off. And then we actually took some off at supply. And I mentioned this also to a lot of our traders, that just because your chart says you're a 4R trader, which we attempt to do, I'm clipping along the way. I never want to be a 4R trader with my target up here, and I'm going to go against this wide range pullback, taking out pivots bar. That's supply sitting there. If you don't believe it, look at that trade there. Before it was red, it was a solid green candle that got shoved back on supply. What happened, we took a piece of our pie off this area. The pullback held, we're able to sell higher prices. It actually bounced here and went higher, sell at higher prices, but never neglected to take profits when we saw the charts. Key point, charts are everything. Right? Your fictitious R ratio, how many units or how much money you're making to what your risk, is all secondary. It takes a back seat to really, really thought out chart ratios. Your chart always is king. If I saw tons of supply here and there's nothing to get ahead in a 200, I would have taken it all here. If the trade was good, I'll still take it, but I may come out with 1R total, be done. Because I do not want to go against this, because there are more times that it will come back at you and take out your stop than it will go through. This one actually went through, but if it did, I already rang the register at that point. Very important decision you have to make when you're doing that. Again, we talk about this every day in our room, where our channels are, where our mechanical targets are. And then we said, but when we get down to brass tacks, what's going to trump that is not the mechanical, it's going to be the supply and demand areas. We're going to take it there. If supply builds along the way, we didn't see it at the beginning of the day, we're taking some off, not all, taking some off. We're going to ring that register. And it does a lot for the psyche and the emotion part of your trading too. Instead of giving everything back, we're only giving away a small piece of that back if it turns, if that supply area comes back. Again, join us, Jeff, at Full Throttle Traders. If you need a one-on-one with me just to kind of maybe help unravel how you're trading, if I can add some insight to that, feel free to reach out to me, Jeff, at Full Throttle Traders, and I'll do what I can to share with you. So anyway, until the next trade, as I mentioned to you, I'm going to be covering weeklies, how to trade for income. Certainly click the subscribe link if you want to see these come out. We're doing these when the first day or two they come out as our members posting this on YouTube. You guys can get a nice flair of how we're doing it. So till the next trade, see you then.